Hello traders, this is Rich from Tradesight. This is the market preview for the upcoming session. This is for Tuesday, May 13th, 2014. Well, I think we got to title today's report as breakout because we finally broke out of the range that we were just kind of just mired in for so many sessions. We've busted out of the 1875 area. And you see, I still have my alert here. I didn't take it off yet. And we finally got a little distance there. We're up about 19 handles on the day. Really strong day. NASDAQ was up almost 60. It was a gap and go day. We gapped up. We sustained above the Tradesight pressure thresholds on both the ES side and the NASDAQ side, and we're able to push higher. So everybody that was in the trading lab today really had the advantage of that, and knowing from the Tradesight levels that we were going higher, and we're going to pull back in today. So market internals were also excellent. The advanced declines were finally positive on both sides. We were plus 1,800 issues on New York and plus 1,700 almost on NASDAQ. So that was it's just a super decisive day. It doesn't mean we're going to follow through and continue higher, but it's something that the bulls can build on here, and hopefully follow through and get some kind of an impulse going here, and use this energy that we've packed into the market now for something we can profit from. So here's the ES side of the market. You can see we finally got out of this little range here with the gap up. At some point this gap will have to be addressed, but this is definitely a positive move. It's a new high on the move, and it's also a new high close on the move, which is important. Now keep in mind here we've got this 13 exhaustion, and the risk line is going to come into play at about 1899, right around 1900. So that's going to be an area to watch, and that could be something that could come into play that not a lot of traders are going to be aware of. So keep that in mind. If we roll back to the downside, we're going to have support here at the 8/8 level, 1875 now. So that draw now becomes support to the downside if we in fact do need to take that direction. The NQ side of the market was also very strong, but it's nowhere near the highs. We've had so much relative weakness in NASDAQ. We've got to climb a lot of ladders here and get through all these levels before we can even talk about printing a new high here. So definitely positive for the overall market. The developments here on the NASDAQ side is we did close above the 4/8 level, and we did close above the 50 DMA. So potentially going short-term positive here after being stuck in this quagmire of lateral trading. We do have a price flip here, so we're one candle up in the secret startup phase. So if we could put together a run here, could be a lot of fun. Working this to the upside. The bonds on the day were lower by 45 cents, and if we do continue higher, we're probably going to see these roll back down here again. We had this 8/8 level at 112.50, very well traded. And these could be a source of fun. So don't forget that while the market could be heading to the upside here, there could be a trade here in this area as well. Here's a look at the cumulative advanced declines. The advanced declines were excellent on both sides. The New York side was always pretty well intact, and you can see that it broke out to a new high. The NASDAQ side was a problem. We're finally starting to see a little bit of a turn here. So if we do get an actual turn here, and we can actually go to the upside here, this could be very interesting, and finally give us a little something to work with, and not just be stuck in this range. So look to the advanced declines tomorrow, especially for some kind of an indication that the markets are healthy and do want to follow through. May need a little bit of a resting day tomorrow, but at the very least we should see something kicking in on Wednesday. And if that's not apparent, that really means it's just kind of a bear market bounce for the NASDAQ. Here's a look at the NDX versus the S&P. Starting to see a little bit of a curl up here. Want to see some more relative strength come on in the NASDAQ, because if NASDAQ can't get it going, the breakout in the ES will surely fail. So even though we did attempt to break out, we've got to follow through to qualify that. We also need the NASDAQ to kick in gear, because if the NASDAQ doesn't really get going to the upside, then it's really just going to be really just a rotational rally where we're not going to have legs to the upside, and we're just going to be taken from Peter to pay Paul, if you will. And here's a look at the multi-sector daily chart. What's interesting is the XAU was actually up a little bit today. So it wasn't a wholesale get me out of anything that doesn't pay me when the economy is expanding. So that was kind of interesting. The BKX was fairly positive on the day, and certainly look at the purple on here. These are the transports. Really good day out of the transports. Flying the ointment was the oil services was really weak today. Would have preferred, the transports performed well. You would have preferred the oil services just to at least hold their ground and kind of tread water. But it's not that favorable when they're actually going two different directions. And so here's a look at the sectors ranked from best to worst. The airline index, which is a late cycle index, did really well. The BTK was very strong, but that was really just, I think, really coming off that oversold condition and blasting higher. Broker dealers were strong. The transports, as we talked about before, were really strong. Semiconductors came on, which was a big help for the overall Nasdaq. The problem definitely was the oil services was the last laggard. Really weak performance. I want to see that kick in a little bit better. Even the XOY wasn't that great. The XOY, remember, is not as volatile as the oil services, but it still did underperform the market by a pretty good margin. So I wanted to see that start to kick back in a little bit. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.